Hey guys, welcome back to the channel. This is Kevin, and today we're going to talk about tips and tricks to get the best mortgage rate possible. All right, first things first is organization. You do not want to come off as someone who doesn't know what they're doing or you're brand new to this game, even though you might be. First things first is what you really want to do is get all your ducks in a row. You should already have everything that they're going to ask for ready to go. Now, obviously, if you're a 1099, you have a lot more paperwork to do, but I'm just going to go off of basic W-2. You're going to need your W-2, tax returns, pay stubs, bank statements. All of those should be in a file on your desktop, on your computer at all times and easily accessible. And the reason for that is, I'll tell you later in the video, is because you might need that to give it to other lenders. So to be organized and have it on your desktop ready to go, that's the best method because you look professional and you come off as someone who is not confused or this is your first rodeo. You come across as someone who knows what they're doing. Okay, so you don't want to be one of those people who come off as willing to pay for points right off the bat, even though you are. So what you want to do is you want to come off, tell them 10% down, 20% down, whatever you're willing to pay for a down payment. Give them your bank statement, your W-2, whatever they ask of you, and then they'll give you a rate. Now you can ask, can we just do a soft pull just so I can have a pre-approval letter? If they don't, sometimes they'll do a hard pull, that's fine. Just know that you have a 2-week period from your first hard pull to your last hard pull. In those 2 weeks, your credit score is not affected because they know you're shopping for a mortgage. So my experience has taught me, and some lenders will do this, some won't, but it's just to ask for a soft pull. A soft pull on your credit doesn't really affect your credit score. A hard pull does. So just to get the pre-approval letter so that you can put offers in on homes, ask for a soft pull. If they don't want to give you a soft pull and they have to do a hard pull, go to a different lender. Maybe they'll give you a soft pull, but getting that soft pull is important because it might take you months. You might do the second house you look at, or it might be the 30th house you look at. So you need to know which, you need to know what phase of the buying experience you're in. So please ask for a soft pull just for your pre-approval letter, and most lenders will do that. Then now when you're in the second phase of your buying experience is that you have a property under contract. And once you have a property under contract, that's when the hard pulls start. And what I mean by that, a hard pull is you're going to go take your little file that I told you to put on your desktop with all your W-2, your bank statements and whatnot, and you're gonna give it to 3 more lenders. Any 3 lenders. Ask your realtor, ask family, ask friends, ask for 3 more lenders so that you have a total of 4 lenders that you are now giving your information to. And so now, since you're under contract and you're probably within that 2-week period, you want to then, if they ask for hard pulls, that's fine. Make sure you get it won't affect your credit for 2 weeks. Get those hard pulls in, get those rates, and then you come back to the table with 3 other lenders with 3 different rates and 3 different terms. And so what you want to do is make sure that you are comfortable with whatever those rates are. And then we move on to the next step. The next step is very simple. You call your lender up and you tell them to do a rate match, because 9 times out of 10, the next 3 quotes you get, one of them will be lower with the similar terms, but one of them will be lower rate than what your lender already has. You simply ask your lender, hey, can you do a rate match? Because this guy is giving me a lower rate, similar terms, can I get the exact same rate? Most lenders will do a rate match. 8 times out of 10, they'll give you a rate match. Some lenders won't. That's when you walk away from that lender and then you go get to that new lender that's giving you a better rate. Plain and simple. Rate match is a very common thing in this industry. Don't be fooled by some lenders telling you that they can't do it. It might be true. Maybe they're not high up in the company enough that they can pull something to the point where they can ask for rate matches, but it is very common. I've seen it at Bank of America. I've seen it at US Bank. So if you can do it at banks like that, I guarantee you can do it at banks, credit unions, and smaller mortgage companies. Once you are with your lender, you got the best rate that you want, whether they rate matched it or you had to switch lenders. Now you're in this phase of, now you have a rate, now you know what you want to do. You can do this before or you could do this after, but what you do is you ask, how many, can I buy a point down and how much would that lower the rate? That is an important question to ask, and you should ask your lender that, and the 3 other lenders, what their points are, because some lenders, they'll take a point off and the rate only lowers a little bit, like maybe 0.25%. And some lenders, you take a point off and it lowers the rate like 0.75%. So that makes a big difference. So you don't want to come off initially saying, hey, I want to do 20% down and I'm willing to buy points just to get the best rate. You don't want to do that. You want to first say whatever you're willing to put down and then buy points after they give you a rate. And that pretty much sums it up. If you could do those couple of things in that order, and you can then probably get the best possible rate from your mortgage broker, is simply because if you, like I said, you're organized. You don't come off as someone who is not organized. You come off as someone who knows what they're doing. Just a simple file, and that file gets distributed to 3 lenders once you're under contract, not before you're under contract. Ask for a soft pull, just for a pre-approval letter, so that you can put in offers on houses so it doesn't affect your credit. And asking for points after the fact, not initially. Ask for points after the fact. And one other thing I wanted to point out was, what is a point? A lot of people get confused about what is a point on a mortgage. A point on the mortgage is just 1% of the loan amount. So, not the purchase price, but 1% of the loan amount. So if you're getting a $500,000 loan, it'd be about $5,000 would be 1 point is what you would pay. And another important question that I get, which, to be honest with you, I was confused on for a very long time, was that $5,000 is you're paying straight to the mortgage company or straight to the bank. That $5,000 does not count towards your 20%. Or it's not like you're paying 21% towards your purchase price. You're actually just paying that separate 5% point just as a fee to lower your rate. So that should cover it. You guys cover those points. Make sure you guys come off as professional and you know what you're doing, and you guys take these tips. I'm guarantee you will get the best rate possible at the time of your purchase. Thanks guys. Like and subscribe, and I'll see you on the next one.